Hello and welcome to ET Interview. My guest in the show today is someone who has created an admirable empire of what could be called as network effects, connecting or incubating a lot of businesses together which may just change your life, or I would say they've already changed your life. He believes in one simple mantra: profit is the ultimate yardstick for any entrepreneur and the true reward for investors and shareholders. It gives me great pleasure to bring on board for the very first time on ET Interview Robin Raina, founder and chairman of EbixCash. I must say that my morning starts with your brand because that's how we are connected, at least on ET Now. So thank you very much for joining us.
My pleasure.
You're planning to go public, and every time when a company goes public, our easy questions, they become hard questions, and our obvious questions are to understand that why are you planning to go public? We'll talk about it, but that's not my first question. My first question is that the brand has now become very symbolic with Indians in terms of the services you handle. So before I get into why you're going public, I want to understand your story. Tell us your story. How did it start? How did you reach here?
Look, I think first of all, you got to take a little bit of a step back. Before EbixCash became what it is today, we had the brand EBIX in the US, where I basically joined a company, heavily loss-making company in 1999. Stock was trading at around 31 cents. The company had not paid money in 23 years. And since 99 to now, I have a sequential record of 22 years of sequential growth, quarter after quarter of profitability. So when I stepped into India, I just had this simple dream. One, I'm a very patriotic Indian. I wanted to do something which connected me with India. I also felt Mr. Modi was talking about Make in India at that time, and I felt I needed to play a role. And then I started looking at what was happening in India in the financial sector. And it occurred to me that everybody was functioning in silos, that there were different functionalities being driven in the area of finance and insurance. And it occurred to me, what if we can bring all these functionalities together? What if we can converge them? What if we can create an airport of sorts? The thing I like to always say is that, you don't choose your airport, you choose your airline.
Yes.
And airline is a product, airport is infrastructure. I'm in the business of creating airports. Now, it takes time to create an airport. It doesn't happen overnight in 3 years. So it occurred to me, how do I build this story up? And how do I organically keep growing it up? And then I started thinking like a capital allocator or private equity. And I said, what if I can buy many of these businesses? All of these are licensed, regulated businesses in finance. So there's a big barrier to entry. What if I can buy some of these businesses and assimilate them together, centralize all the functionalities, centralize all the back-end stuff, and ultimately create a cohesive EbixCash? And that's what I did. We ended up buying 26 companies, invested upwards of $750 million into India, and centralized virtually everything at the core, and created what is now called EbixCash, all the functionalities of finance, insurance, fintech, B2C, travel, put all of that together and created a story which was profitable from day one and has continued to be profitable and has consistently kept growing.
Is profitability the obvious and perhaps the most important aspect for you? That was my introduction, that unlike a lot of tech entrepreneurs who believe in growth and they're judged by consumer acquisition, you believe in profitable growth.
Why? That's absolutely true. If I had to choose between profitability and growth, I would choose profitability. I've always been like that. You don't make money just by imagining you're going to make money. You have to have a system, you have to have a process, you have to have a discipline, and you need to have it in your DNA of each and every employee in your company, especially your senior managers, right? And so we came up with a simple mantra. My mantra to my India senior management was, if you're not doing 30% EBITDA in your division, then you're not really successful, was my simple mantra. So we started focusing on this 30%, because I did the same thing in the US in the early days and then grew it to 40% over a period of time. And that mantra has stayed. I always say that there's no shame in making money, right? Sometimes people forget that business is as simple as selling price being a lot more than the cost price. And if we can do that, and after that you just have to create the systems, the processes, and discipline around it. And that's what we did. Look, growth is always required. And we've done quite well in terms of our CAGR growth. At the same time, if I had to choose, and there was a problem on growth because I had to, let's say if I had to subsidize consumers, a lot of people are subsidizing consumers today in India. We refuse to do that. We don't want to just sell for the sake of, we don't want to get growth for the sake of growth. I want profitable growth.
So for those who are burning cash and are saying, look, this is necessary to build the business because this is customer acquisition, how come that thought never occurred to you?
Look, I actually feel they're doing a disservice, a heavy disservice to our younger entrepreneurs. Each and every talk that I gave, I try to, when I'm talking in front of younger entrepreneurs, I'm trying to tell them that, look, business is not about looking for instant fame. What has happened in recent times, people have at times discovered instant fame, instant valuation, and people forget that that's not going to stay for long. Ultimately, you need to show value. You need to show sustained value. If you can't do that, you're going to fall flat on your face. At some point, you know, cows don't fly. You can't keep saying cows will fly one day. If they don't have wings, then they won't fly, and you're going to fall flat. So having said that, today I feel the younger entrepreneurs are in so much of a hurry at times because they feel, look, I'll get private equity associated with me, I'll get a big bank backing me, and I can just show growth, I can subsidize the consumer, or I can go into a business, lose money and grow. And then finally valuation will come in and one day I will start making money. How are you going to suddenly make money if you don't have a business model? How is it going to happen? That's not possible. If your consumer is attracted to you because you were subsidizing the consumer and you said, I'm going to sell you below 10% below the cost price, you're forgetting the consumer is coming to you because you are selling below the cost price. Try it out. Some of these players have tried it.
Yes.
And their business has collapsed. But I don't think that's real business. If you are in real business, you need to first know that you need to make money. Right? You need to have I can understand some entrepreneurs who say, look, I'm going to lose money for 2 years, but I have a plan to make money in the third year. Then talk about that plan. Let people understand it. I don't see that sometimes. I see people who have talk for years and you just don't see any way of making money. To me, those are not great stories. I don't want to be part of that kind of paradigm.
You know, there are some companies which are mentioned in the DRHP that we don't know when we'll become profitable. That's part of the DRHP. I'm not getting into which company, but this is something which actually shocks everybody. Just a follow-up question, as an observer, as somebody who understands valuations, as somebody who's built a formidable IT business, tech stocks are down. They're 70 to 80%, both globally and locally. Are you surprised?
Well, I am surprised. At the same time, I do feel that it'll come back in. I think what I have learned over a period of time, I've been doing this 2 decades now. Markets have a way of balancing themselves out. Look, we live in a democratic world, right? And capitalist market. And markets will balance themselves out. Ultimately, there's also a learning process hidden in it for each company. There are companies who go learning now. COVID also taught some of them a lesson, right? That they can't just keep burning cash. And if the markets don't support these companies, if there was lesser money behind such companies, they will be more yearning to make profits because they want their share price to do well. So I do believe this will get, there was a NASDAQ bubble in the early days in 99, and a lot of companies from multi-billion-dollar companies became nobodies. Yes. And some of them actually learned, and some of them fixed their business models and are still very successful. And the others who didn't learn just collapsed. I do believe something like that will happen, in the coming years. And some of them will collapse and some of them will learn and become better companies.
As I look at your business has made a comeback. It has made a comeback, arguably what has been the toughest time for your business, travel, Forex. For a large part of last year, that business in a sense was not operational at all. So how come you're growing at a time when world is not normalized?
Well, look, that's where creating airports helps. That is where the diversity of products helps. On one side, we had 3,000 employees basically in the area of travel, Forex, remittance, e-learning, basically almost getting no revenue because of COVID. But on the other side, I had so many other businesses which were thriving. And so that is where your diversity helps. Look, if I'm evaluating an acquisition at times, I will be asking questions like, how much is your recurring revenue? If your recurring revenue is less than 70%, I'm not as interested. I will look at your diversity. What is your customer concentration? If in EbixCash, my largest client doesn't even account for 1% of my revenues.
It's that diversified.
It is that diversified. And diversity to me is very important. Sometimes I see good companies with very high profitability, but their customer concentration, there are 10 clients holding 49% of the company, right, as clients. And to me, that's a complete no-no, because that's a big risk. If two of them go away, the profitability can just evaporate, right? So to me, building a business with diversity is extremely important. And so that's what helped us through the COVID period. And in a COVID period, we have done quite well with respect to profitability. It's all there in the DRHP. And in terms of growth, actually. But I think our diversity of products, also the fact that we are in regulated industries. See, there has to be some barrier to entry in your business. If there's no barrier to entry, then somebody can come in someday, maybe not now, maybe 2 years from now, 3 years from now, they'll come in and somebody will dislodge you. But in our business, we carefully entered businesses which are heavily regulated. It is not easy for somebody new to come into those businesses. So if you look at whether we are in Forex, whether you're in remittance, you're going to see all of these are highly regulated businesses. And we virtually, like in remittance, we basically ended up buying India's 1, 2, 3, 4, 5, and then growing that business. Similarly in Forex, meaning we virtually bought 1, 3, and 4 in India, and so on. So having said that, but these are highly regulated businesses. It's not like licenses are issued every other day to another company. And then if you create an aggregation, it is impossible for people to enter. So it's a function of both. Barrier to entry combined with diversity of business, and then technology. Key thing that we always have invested in is technology. We have always put technology at the center of everything. Look, it's one thing to sell technology to others. If you walk into an EbixCash office, let's say our head office in Noida, you're going to see there's no drawer in that office for any employee. There's no drawer. Because the basic lesson we wanted to send to our employees is, how can you create paper when you are teaching others to disintermediate paper? So EbixCash truly runs on a digital basis. All our CRM, our customer management, our expense management, our acquisition management, our employee management, our HR management, everything is on a tool called iEmployee. And to me, you have to breathe first what you're going to tell your people. And why is that important? Because if you are putting technology at the center, you're going to be efficient from within. You will also have audit trails to everything. Yep. And ultimately, it will also reflect in your customer handling, right? And so putting all those things together, I think that's what helped us through the COVID period, that we were able to keep our head high and continue with our profitability.
You're number one in whatever businesses you are, number one, number two. Is that a conscious strategy that you want to be in a commanding position?
Look, we would like to be in a commanding position, and it sometimes happens and sometimes doesn't happen. There are areas in India where we are not in a commanding position. I'll admit it openly, meaning there is B2C travel in India, in consumer travel, where we saw a phenomenon where competitors wanted to subsidize the consumer in travel and lose money.
But those are market share challenges. In terms of profitability, whether it's a travel business or the Forex business, are you the most profitable business? Are you the most profitable company?
Clearly we are.
Yeah, that is more important, I guess.
Absolutely. Look, we absolutely focused on profitability, but we've actually done very well in market share also. If you look at most of our businesses that we have entered, we have done very well. Let's put it that way. In most places we'll be a leader, and we've done extremely well in most places.
You filed for a DRHP when I know others who are already getting clearance from SEBI, they've decided to delay their IPO. Why is that? You're not worried about market conditions?
Look, I'm a very pragmatic person, so I can't exaggerate anything and tell you that, look, I'm overconfident and everything will happen. But at the same time, I'm a big believer in one simple thing, that profitability always works, right? and I have a consistent, profitable story. And to that extent, I felt that in the current time, more than any other time, people need to see this story. People need to see how EbixCash has differentiated itself. And it's not a story that was prepared for an IPO. There is no secondary, for example, in this. This is a pure, fresh offering, right? It's a primary. And it's a story of consistent profitability from day one. Whether, whatever time period you want to pick, you're going to see consistent profitability. So we just felt that, look, it's a story which differentiates itself. And maybe we'll have more takers just because of the fact that we are, because of the diversity of our business and the profitability of our business. Maybe this is a good time for people to actually look at that story.
If I say that EbixCash is a network company, or it believes in creating network effect, it is not a product company, it is not a B2B company, it is not a B2C company, it believes in the magic of network effect. Will I be right?
That's absolutely correct. That is absolutely correct. That's what I like to say, building airports, right? It's creating, when you create networks, it becomes a catch-22 position. So network feeds into each other, right? And that's what we like to do.
Now, there is a DRHP which you filed, which means that we cannot talk about forward numbers. But just to get an indication, 2020 was all about survival, 2021 was about revival, and now it is about thriving. Have you reached the thrive part of the cycle, the business cycle?
We are definitely in a growth cycle. We're definitely in the cycle of, when there's always, as you said, there's a phase of survival, then you get into the phase of consolidation, and then you get into the phase of growth. We're past the first two phases. We're definitely into the phase of growth right now.
So can I say that going forward, the real business is yet to normalize and the growth will all be automatic because business will start normalizing? It's not a forward guidance, but that's how the nature of the cycle would move.
That is the nature of the business because, look, I'll give you a very simple example of what you just said, which is take Forex business. We're sitting at 20 different airports. We're sitting at 12 ports. We are sitting in a majority of the 5 stars in the country. We're at 3 of the top religious institutions in the country, the duty-free shops and so on, and 1,000 plus 1,200 corporates and so on. And as travel opens up, foreign exchange automatically will happen. And we are there at all the right places as the player out there, right? Whether it's educational remittances going out, the tie-ups that we have and so on. So as long as business is as COVID becomes a thing of the past, business has to automatically come to us, is how we read it.
What is the next growth frontier? If I look at Indian IT companies, which you just referred to, the traditional IT companies, they've not grown by acquiring businesses, they've grown organically. Would you see a scope for both inorganic and organic growth?
Absolutely. I actually feel that what Indian companies haven't done as much is buying companies abroad. Mm-hmm. I would like EbixCash to be one of the larger MNCs emanating out of India and spreading its wings across the world. Now, what I want to do is to create an IP, an intellectual property. Indian companies have done very well at creating consulting businesses in the software arena. Very few companies have created intellectual property out of India that they are selling abroad. What I mean by that is nobody's created a Microsoft or an Oracle kind of a player out of India, right? We might have created large-size companies in India, but those are software consulting companies. So my dream is to create IP out of India and take it across the world, enter a French market, for example, and make a local acquisition first so that I have local French contacts with local banks, local insurers, then bring in the EbixCash portfolio products and smuggle that through that French relationship. So it's a mix of organic and inorganic is how we look at it.
So is the past growth a reference point to understand future growth, or future growth could be completely different?
I think it is a good reflection actually, but at the same time, it could be completely different. Look, meaning India is a growing market first of all, and as we go into international markets, we could do a lot better. But I'm fairly proud of what we have achieved over the last 3 years itself. And so to me, even if we just went by what we did in the last 3 years, I think that's a reasonably good performance.
One of the questions I always ask a tech entrepreneur is that I love to quote Bill Gates. And his favorite quote, which I follow, is, we always overestimate the impact of disruption in the short term underestimate in the long term? I'm sure you refer to that. So let's apply that. Purely your understanding of the tech world. Where are we overestimating disruption and where are we underestimating disruption? You've disrupted the company. For example, you've disrupted the business.
Look, I am a disruptive business. There's no question about it. We're a disruptive business. And I actually hope and wish that there are more disruptive businesses coming out in the technology sector in India. India and Indian engineers are playing a key role in disruption, but for others.
Yes.
We are providing the technology, the know-how to other American companies and European companies to do the disruption. And that's not happening from India, really. The disruption that needs to happen, which is, you see, that is where when I look at some of the, outside the technology sector, when I go in and look at, great companies like Mahindra, for example, just to name somebody,
yes.
I look up to them. I really do. I believe that these are companies that have gone and competed with the best in the world and still shown why they are great companies, right? And now what is happening is that in India, we get suddenly a startup coming in and becomes of the size of a Mahindra. Are they really the same? Not really. Meaning, just because you have the valuation doesn't mean you have played the role that a Mahindra has played. Now, again, it's probably not fair to give examples, but I feel that more disruptive play would be great from an Indian perspective. There's a lot of opportunity to take any sector. Take the sector of insurance in India. Take the sector of reinsurance in India. Look, there is, or take the health medical record section. I mean, there are things to be done. India has an opportunity. What India did in UPI, India has taken a leadership worldwide. What India does in UPI, no other country does.
Yes.
So I give full credit to the Modi government for what they did in UPI. It is unheard of, incredible. Even in the US, you cannot do what we do in India. Within seconds, we do this UPI transaction. But you know what? We should be doing that in the field of EMR, electronic medical records. We should be using, how do we predict disease? How do we go in Delhi and suddenly we realize that there's a dengue fever spreading, but we are 40 days late to the fever, the news. How come we don't know in advance? Now, there are ways to do it. If we can assimilate medical data, if we can put everybody on a common network, right? And to assimilate medical data, you'll have to build systems. Some company has to stand up and build these exchanges to do all that, right? And that's disruptive play. That disruptive play needs to happen in many sectors, and that's an amazing opportunity where India can boom. Take the field of reinsurance. We have a reinsurance hub in London, yes, which incidentally is powered by us today, and where entire reinsurance business is gravitating to Lloyd's, the London market. Why can't it gravitate to India? Why can't reinsurance across this entire zone gravitate to India? China is trying to build a reinsurance hub, but then I can tell you they're not going to succeed. They don't have the know-how. That's the kind of disruptive play that is required to build something unique, and you'll suddenly see, reinsurers across the world gravitating to India because you would have a hub here writing this treaty and facultative reinsurance and so on. So to me, the more the disruptive play, the better it is. And there's not enough of it happening right now in India, at least in the software technology field.
Okay, last leg of the interview, and we're interacting for the first time. So I'm going to shift gears literally in this case and talk about you as a person. Tell us more about Robin, who he is. Is he an risk taker? Is he an entrepreneur? Who your heroes are? Who've inspired you?
So look, I'll start with who inspired me because that will tell you a bit about me. From on the business side, I am a big fan of Warren Buffett. I'm a big fan of Steve Jobs. Now, they're two different personalities.
Very different, yes.
Buffett simply because not only his simplistic style of thinking, when I talk about this selling price being more than the cost price and stuff like that, this is coming from Mr. Buffett, yes, right? Simplicity of, you have to be able to define a business in 2 minutes. And then his ability to give back. The
99.9%.
$59 billion giving, yeah, and that too not setting up his own foundation, just handing it over to Bill Gates Foundation. That takes some guts. And then you go to Mr. Steve Jobs and his detail for perfection. He genuinely believed that I am changing the lives of people through my design. And full marks to him. So for me, these are my superheroes. And from an Indian context, I'm a Gandhi fan. I'm a Mahatma Gandhi fan. Big believer in nonviolence. I always fall for people who have the cause of the underprivileged very close to their heart. My biggest thing in life is helping the underprivileged. If I had to prioritize between my charity work and my business, I'll tell you without fail, I'll choose charity. That is what I live for. I enjoy it. Presently I'm building 6,000 homes in Bhavana. I've already handed over 2,304 homes free of cost to slum dwellers on legal land in what would have been India's second largest slum. 30% of it is not a slum anymore. I have schools across the country and so on. So it's a cause very close to my heart. I just like to change people's thoughts through my work, whether it is in the field of charity, whether it is in the field of work. I like to break taboos. That's the way I dress. Sometimes people would call me flamboyant. I don't consider myself flamboyant. I actually do that sometimes just to change people's attitudes. I'm a big believer in letting everybody do their thing and not having a fixed thought process. I'll give you a short story for viewers that I went to recently. I was in Lloyd's building and I met the CEO.
This is the London Lloyd's.
The London Lloyd's, and I was wearing my toned jeans, and the CEO basically took a picture and said, "You're amazing." People at Lloyd's walk in black suits and black tie. And I said, why I wore this? I specially wore this for you. And she said, okay, tell me the story. And I said, you know what? Lloyd's needs to be disintermediating paper. Your entire business is paper-based, right? Yeah. I said, and somebody's got to teach you, you got to get out of paper. I said, attitude change. You are so wedded to paper. And I said, coming in this dress is to send you a message that it's okay to have tradition, but you also need to now embrace reality of where the world is headed. I said, all I'm here to just shock you a little bit.
Did she give you business after this chat?
We actually are. We are running the whole thing right now. So we run the whole reinsurance.
So the tone jeans really helped.
So it worked. Apparently it worked. So, yeah.
So I'm going to take a liberty of asking one question, which I've never asked anybody, which is that in the movie Wall Street, Gordon Gekko said that every man is chasing a number. What is the number you're chasing in your life?
I am not chasing a number. I am not into that. I am the exact opposite of that. I'm actually writing a book called, it's a morose title. It's called Blueprint to Death. And this is a story about what I'm talking about is burning my own wealth in my own lifetime. And it's a statistical analysis of how much you need in your lifetime. And sometimes we forget that even if you want to live very comfortably and drive a Ferrari, you don't need more than 3 crore rupees a year, really taxpayer. And if that's a fact, do a maths on the next 30 years of your life. Maybe that's what in my case, I said, okay, how much can I live? 30 good years? So I said, how much money do I need? That's 9 million, for example, $9 million. But I have a bit more than that, a lot more than that. Why do I need that? Yeah. So the book is all about that I want to give back. I want to burn my wealth in my own lifetime for an underprivileged, create institutions. You see, coffin doesn't have a pocket. That's what I believe. And giving is the only thing you can take away with you. So I am into that school of thought versus chasing a number. I want to be happy in here, in this small area.
So nice to hear that. But such a wonderful interaction. I'm so glad we spoke freely about your thoughts as an entrepreneur, the importance of profit in the last part. And this has been a learning for me that the more you get, the more you get. Really appreciate your time and good luck.
Thank you. Thanks.
Well, that's it on this edition of ET Interview. Thank you for tuning in and thank you for watching.